The wrong way to pay yourself is guessing, because owner pay depends on how your business is taxed. This is founder filing, where we make the paperwork of starting a business simple and clear. Today we are explaining owner draws, salary, payroll, S-Corp basics, taxes, and how tools like Gusto, QuickBooks, Mercury, Novo, and Found can help you build a system. This is educational information only, not legal or tax advice. Your entity type, tax election, state, payroll status, profits, and reasonable compensation facts matter. No method guarantees savings or compliance. Before changing how you pay yourself, talk with a CPA or attorney who understands your business. The first question is not how much should I pay myself. The first question is how is the business taxed? A sole proprietor and a single-member LLC taxed as a disregarded entity usually take money through owner's draws, not W-2 payroll to themselves. A partnership-style LLC may use distributions or guaranteed payments depending on the arrangement. An S-corporation owner-employee generally needs reasonable salary through payroll before taking distributions. A C-corporation has its own rules. The do-it-today tip is to confirm your federal tax classification before moving money. The drawback of copying another founder is that their entity may be different from yours. Skip any advice that says every LLC owner should pay themselves the same way. An owner's draw is when the owner takes money out of the business for personal use, common for sole proprietors and many single-member LLCs by default. It is not the same as a payroll paycheck with withholding. The business profit may still be taxable whether you leave the money in the account or transfer it to yourself, depending on tax classification. That is why draws need bookkeeping discipline. Use a business bank account like Mercury, Novo, or Found, and label transfers as owner's draw rather than random spending. The drawback is that draws do not automatically set aside taxes. Skip taking big draws until you know what cash is needed for taxes, expenses, and reserves. The do-it-today tip is to create a regular draw schedule instead of emotional transfers. If your LLC has elected S-corporation tax treatment and you work in the business, the IRS generally expects reasonable compensation through payroll before distributions. Reasonable salary is not a magic number from the internet. It depends on duties, industry, time worked, revenue, profit, location, and what similar work would cost. Gusto is useful here because it helps run payroll, withhold taxes, file payroll forms, pay employees, onboard workers, and manage contractor payments depending on the plan. Its drawback is monthly cost, which may not make sense before the business is profitable enough. Skip S-Corp payroll planning if a CPA has not reviewed whether the S-election makes sense. The do-it-today tip is to document how you and your CPA estimated salary. Owner draws and salary affect cash flow differently. With a regular draw, you may need to make estimated tax payments because taxes are not automatically withheld from the transfer. With salary, payroll withholding and employer payroll taxes come into play, and payroll filings must be handled on time. S-corporation distributions may be treated differently from wages, but only when the salary and compliance pieces are handled properly. The drawback of focusing only on saving taxes is missing payroll rules, state taxes, bookkeeping, or retirement planning. The do-it-today tip is to ask your CPA for a written pay plan, salary if needed, draw or distribution schedule, tax set-asides, and estimated payment dates. Skip TikTok-style shortcuts that promise guaranteed tax savings. A pay-yourself system starts with separate accounts and categories. Mercury is strong for startup-style businesses that want modern banking, cards, permissions, and higher balance tools. Novo is simple for many small businesses and freelancers that want online checking, invoicing, and expense organization. Found is especially useful for self-employed people who want banking, receipt capture, tax set-asides, and simple financial discipline together. The drawback of any bank is that it cannot classify taxes correctly for you by itself. Skip opening multiple accounts if you will not maintain them. The do-it-today tip is to create buckets or separate accounts for operating expenses, taxes, owner's pay, and savings. Then transfer money on a schedule, not whenever the balance looks tempting. QuickBooks helps you see whether you can afford to pay yourself because it tracks income, expenses, profit and loss, owner draws, payroll expenses, liabilities, and bank balances. For an LLC, the labels matter. Owner's draw, member distribution, payroll wages, payroll taxes, reimbursements, and loans should not all be lumped together. QuickBooks is familiar to many CPAs, which makes tax time smoother. The drawback is that the software is only as accurate as the setup and review. Skip relying on automatic categorization without checking it. The do-it-today tip is to review a monthly profit and loss statement before deciding your draw or distribution. Paying yourself from revenue instead of profit is one way businesses run out of cash. A brand new side hustle may only need a separate bank account, basic bookkeeping, tax set-asides, and CPA guidance. As profit becomes consistent, the question changes. Should you keep the default tax treatment, elect S corporation status, run payroll, hire employees, contribute to retirement accounts, or build a more formal compensation plan? That is not a one-size-fits-all decision. The administrative cost of payroll and S Corp compliance can outweigh tax benefits at low profit levels. The do-it-today tip is to schedule a tax planning call before the end of the year, not after December 31. The drawback of waiting too long is missing deadlines for elections or estimated payments. The drawback of moving too early is paying for complexity before it helps. Owner's draw is usually the simple path for sole proprietors and many default single-member LLCs. Salary becomes central when you are an S Corp owner-employee or have employees. Gusto is the clearest payroll pick when payroll is actually needed. QuickBooks helps track profit in categories. Mercury fits startup-style banking, Novo fits simple small businesses, and Found fits self-employed owners who want tax set-asides built into the money flow. This is educational information only, not legal or tax advice, and your entity, tax election, state, and profit level matter. Subscribe to Founder Filing for calm business setup guides. The paperwork is simpler than it looks, so take it one step at a time, and when in doubt, talk to a CPA or attorney.